Welcome back to the Value Investors Club. I'm your host, Simon von der Licht. Let's get right into it with VIC readings, the format where we look at the best of the best value investment recommendations by the best of the best value investors out there. Today we have General Motors Co. Ticker is GM. At present point of fighting is $33.65. This is not recommendation, not advice. Please do your own diligence before investing into anything. And let's get right into it. And please write down in the comments below if you have invested, will invest, or why not into General Motors. Description: opportunity. General Motors, GM, appears as an attractive opportunity as the market is not recognizing the significant upside opportunities of its investments in EVs and autonomous driving. GM is trading at $33.65. It has a market cap of $49 billion and is expected to deliver in 2022 $6.75 to $7.25 adjusted EPS. $13.5 to $14.5 billion of EBIT and $10 to $11 billion of adjusted automotive free cash flow. I will focus on the sum of the parts analysis to showcase the potential value creation of some of the growth investments deliver on expectations. GM business units. GM is composed of 4 business units: GM North America Automotive, GMNA, GM International Automotive, GMI, and GM Financial, GMF, and its Cruise, its autonomous driving business. GM North America Automotive. GM North America Automotive combines its highly profitable and cash-generating ECE trucks business with its developing electric vehicle segment, where GM has been investing most of its new capex and resources for the last few years. The ICE truck business is a mature and profitable business that is enabling GM to deliver $14 billion of EBIT and $10 to $11 billion of free cash flow for 2022. In a market that is below average at 14 million SAAR versus the 17 million pre-COVID SAAR from 2015 to 2019. GM is utilizing the cash flow generation to invest in its electric vehicle platform and manufacturing capacity, with the objective to reach 1 million NAEV unit sales and 50 billion of revenues in 2025. The capex investments to achieve this objective are significant and increasing from 9 to 10 billion in 2022 to a guidance of 11 to 13 billion going forward. These investments will be a significant headwind to cash generation in the coming years, but should enable GM to achieve double-digit sales growth while maintaining GM&A EBIT margins between 8 and 10%. To simulate different scenarios, I will showcase a base case and downside scenario for the sum of the parts valuation analysis. GM International. GM International is composed of GM-led AM and Asia business, including its China joint venture. Historically, this division has been barely profitable, with the exception of the China JV. For the sum of the parts I will only assign value to the JV equity value at 1x book value, with 4% downside and 8% base growth scenarios. GM Financial. GM Financial is a captive auto lending business which has grown significantly to 15.6 billion of equity and has delivered ROEs north of 20% for the last few years. This business outperformance should subside in 2023 and forward as used car prices are decreasing, and this should normalize delinquencies, net charge-offs, and ultimately profitability. For the sum of the parts analysis, I utilized growth of 0% and ROE of 10% downside, and growth of 5% and ROE of 15% base. I used 1x book value as a conservative estimate of the terminal value for the business. Cruise. Cruise is the autonomous driving unit that has been able to test driverless paid rides to customers in San Francisco, Austin, and Phoenix. Cruise is leading this technological race with Waymo, Alphabet, as the only other competitor currently offering paid driverless rides to customers. GM owns north of 80% of Cruise and is expecting to contribute $2 billion per year to continue to fund its operations. For the sum of the parts valuation, I use $0 downside and $24 billion or 80% of the latest $30 billion fundraising valuation base case. Net debt. GM has significantly reduced its automotive net debt position, adjusted for its pension and other retirement liabilities, which currently stands at $8.4 billion. Sum of the parts analysis, base case scenario, 234% 3-year return. In my base case sum of the parts analysis, I utilized the 12% GM&A CAGR Investors Day guidance, 9% GM&A EBIT margin Investors Day midpoint guidance, CapEx at $12 billion Investors Day midpoint guidance, GM&A terminal value at 10x multiple of free cash flow, and no GM&A cash taxes, as the company utilizes its $19.8 billion of deferred tax assets. Also assume that net interest income is zero, as $23 billion of cash and securities cover $19 billion of debt, and that depreciation and pension of OPEB expenses stay constant at 2022 levels. Sum of the parts analysis, downside case scenario, 37% 3-year return. In my downside case sum of the parts analysis, I utilized the 5% GM&A CAGR, 8%, 5% GM&A CAGR, 8% GM&A EBIT margin, Investors Day low point guidance, CapEx at $1 billion, Investor Day low point guidance, GM&A terminal value at 6x multiple of free cash flow, and no GM&A cash taxes. Also assume no value for Cruise. He sees an upside of 37%, like I already said. Summary. The sum of the parts analysis would suggest that the market is significantly discounting GM Investors Day guidance, which, if delivered, could enable significant value creation, more than tripling the stock price over 3 years. The CEO, Micheal Burry, has, in my opinion, demonstrated good management and capital allocation skills, closing unprofitable subs, reducing net debt, delivering profitability and cash flow under very different market conditions. Whether she can capitalize on her investments in cruise and EVs is still to be confirmed, but the risk-reward appears favorable. Main risks: GM electrification guidance can be achieved with significant waste of capex and resources. Cruise autonomous driving never reaches commercial success. Economic crisis, labor and market headwinds significantly reducing automotive sales and margins below 8%. Severe used car prices reduction impacting net charge-offs and profitability for GM Financial. Catalysts: continuous progress on EV sales and production capacity development trending down towards 10% plus margin range. Accelerated growth of additional EV business, including BrightDrop, GM Defense, services, etc. Cruises reaches successful commercial scale and monetization. Thank you very much for tuning in, and see you next time. Please write down in the comments below what you think of this idea. I think it is interesting. I find it interesting, but I don't like that they use the Investors Day guidance as the only point of references for their valuation.